Alright everybody, this is your market video for Wednesday, April 3rd. Tonight's video is a little bit late because I had previous commitments, but nonetheless we are doing a review for today. Today we finally got a distribution day. We did about 154 million shares on the SPY, which was pretty decent. It's really nothing to write home about. But really, considering some of the dead volume sessions earlier this year where we were doing only about 60 or 70 million shares per day, it's actually pretty good, especially for a red candle day like this. So what I'm trying to say is that institutions are beginning to dump stocks. We're seeing distribution. We had a day like this in late February, I believe February 25th or so. But when you think about it, we've mostly had these green candles throughout the year on very low volume. So in all fairness, a day like today is expected, surely, because we've been accumulating all these green candles the whole year pretty much. And today is not really a big day when you think about it. We were only down 1% on the SPY. It might have looked horrible, if you just look at the way that the chart looked today, but all in all, we were down only 1% on the SPY. But what makes it significant is, like I said, we rarely got down days like this the whole entire year. So last Thursday, you had that all-time high in the markets, and I was stressing how, this needed to be on Thursday last week because you wanted the world to go out there and buy things for Easter, and rarely do we see bad news going into a weekend, especially an extended weekend that started on a Friday. So that was last Thursday. And yesterday, or I should say Tuesday actually, we shot up even higher above that all-time high. So we put in a brand new all-time high. So there's just so much resistance here that the market had to correct. The only thing we didn't know is we didn't know what was going to happen today. So you never really know, but in the back of your mind, logic tells you we're at resistance. We need some sort of correction, and we got that today. And it was only 1%, So I'm not trying to make a big deal out of it, but this was that one-day correction that we got based on yesterday's action. So what happens next? That's the big question. I think we're going to see some follow through on this downside in the near term, And I'm not saying that just because we're at an all-time high and it makes sense. Now, if you look at the daily chart, we've had a decent up move in the market since about November 20th. Let me see, November 20th. We had one minor correction just prior to that fiscal cliff resolution at the end of the year, remember that? And we also had one more on February 25th, or was it 26th, around that time where this red candle was. Now, today could have been a signal for another such correction in this uptrend, But this reversal could be a little bit stronger, So we saw two reversals, one at the end of the year, the other one February 25th, but I think this one could be a little bit stronger. Why? We've been hammering on this 20 MA, this orange line, for weeks now. And when you look at the pattern, you can see that we're putting in a little bit of a bearish consolidation. Now, it's not perfect. You can argue with me, and I might grant you your argument, but nonetheless, just by looking at these candles, we see some bearish consolidation, and we are at all-time highs. So how much lower would we go now should the market correct? That's the big question. You could go down to this pivot only around 153.60 and then reverse higher. That's possible. It could be a short-lived event. We can go to the 50 MA, this blue line, or maybe even this pivot point at 148 to 61. So, but now here's another problem for the markets. Now we're into earnings season, and we'll be getting more and more companies reporting into the next couple of weeks. Now, we've seen a lot of hype. Expectations are basically raised through the roof because the market is at all-time highs. Just turn on CNBC and you'll know, how excited they are about the markets. And what I'm saying is that the expectations are very high for these companies to have really, really good earnings numbers, okay? And that's very unrealistic, okay? So this earnings season, if any of these companies comes out with a bad earnings report, they're going to get punished, okay? It could cause more downside than ever before, okay? So, if next week we get a company and it says, well, our earnings are down 10%, 20%, they're going to put in a really, really big red candle on that day, okay, because of those high expectations. So what I'm saying is be very careful with your longs, okay? I don't recommend holding any companies into earnings anyway, okay? But if you must hold a company into earnings, hold a short, okay? I'm not saying hold any at all. Don't do that. I don't do that anyway. But by all means, do not hold any longs into earnings at all. Okay, you're just playing with fire. Now let's move on to day trading today. Okay, I have to say that today it's been very tough picking pivots because the market kept creeping lower and lower. Just when we saw something that could have been support, well, guess what? The market broke down lower on us. So considering the bullish sentiment overall, today's action was really monumental to me. Even though it was only a 1% change in the SPY, to me this was very significant because of the intraday action that I saw. So if you look at the intraday, the SPY broke down several times, okay? So I gave out this 155.74 level on the SPY as support. So for those that scalped it, you could have made a decent trade here, okay? But I must warn you, in markets like this, where you see red candle after red candle after red candle, you have to be in and out of your scalps quickly, okay? Especially when you get moves like this, okay? Now, one interesting thing about the spiders is that, and this is really why I have this blue chart instead of the regular charts that I have, is to show you this, is that today's low was around this black trend line right here. And you're going to have to go back in time to see how I get this trend line. Let me just see here. You have to go back to the new year and to the last sell-off day on February 25th to draw this line. Again, these are the two corrections that I was telling you about earlier. So this basically means that if the market somehow closes below this black line, I suspect that it will serve as major resistance if the market goes back up, okay? It's already tagged it twice, so the likelihood of that is very high, okay? So I'm thinking that now is the third time that we're tagging this support line. Now it should be very easy to break down through this support line, okay? But now the question is, where is the target? So we have to look at the spiders day by day and, see where it might end up before it maybe even reverses back up, okay? It might be a short-lived sell-off, or maybe we get a little bit more selling that we think we might get. So now on to the charts. Now let's start with some really good news, something I'm very excited about. Now yesterday I gave out an SDS swing long at the 43.74 level. So we got a perfect entry right here. Now I closed that position today at 44.30 because of the gap fill and the 200 MA area, okay, as being resistance. So as you can see, the SDS struggled here. Now this chart is the inverse of the spiders. So you will see all of this on the spiders just the other way around, okay? So whatever is resistance is going to be support, support is going to be resistance, and so forth. Now the reason I play the SDS instead of the spiders, especially on swings, is because you stand to make more money, okay? It's more profitable. If you look at SDS today, it went from 43.76 to 44.98, okay? So you could have made almost $1.20 on it in theory, okay? Just on an intraday basis from high to low, okay? And this is on a $44 stock. Now if you switch to the spiders, you went from around 157 to about 155. So it's only a $2 difference, but it's a $155 stock. Whereas the SDS was a $1.20 difference on a $44 stock. So having said that, that also makes the SDS more risky if it goes against you. So think about it. If it goes in your direction, you make more money quickly. If it goes against you, you lose more money quickly. Okay? Get that? So because you have more shares, because it's so cheap, okay, you can afford more with the same amount of money, the SDS also has the ability to actually move almost the same dollar amount as the spiders. Okay? So for that reason, I made sure to take my SDS off the table. I said this is a good level. I made a pretty decent profit. And I actually gave you the levels even before the market opened, because I saw the gap fill, I saw the MAs, and this was my technical level. So I didn't know if the market was going to sell off. Okay, nobody knows that really. But based on the technicals, this was my level, and I sold it, and we made a good profit. If you took it with me, congratulations, you made some decent money. So could I have waited, to get more money out of it? Sure, I could have. But why would I take the risk? Again, with stocks like this SDS, another one is the VXX, you have to be very careful. Don't be too brave with them. Okay? You're still going to get a very good profit, and in all fairness, the market could have reversed off of any of these support levels. So we really don't have a crystal ball to see where exactly we're going to go. So you could have easily lost your profits on this SDS as well. Okay. Now as far as intraday plays, it was really tough finding good trades with the markets breaking down at every support level. Okay, that's the honest truth. Okay, we don't know everything. Sometimes we just can't pick the perfect bottom. Okay, so I gave out a few trade ideas on Twitter. For example, I gave you Starbucks at 58.26, I believe. Yes, 58.26. What do we have here on the technicals on the intraday? You had a gap fill, you had previous pivots, and this is actually a 382 Fibonacci retrace too. So you had a really good level here. Okay, it's all great, but the market wasn't participating. So again, no harm in there whatsoever. You have to keep your stops very tight in markets like this. So I moved out for a flat. Maybe I lost a cent or two. No big deal. Okay? I was controlling my losses. And remember, guys, when you're playing these reversal patterns, your stock has to react immediately. So that's the key. If it doesn't and you stick around, basically that pattern, that reason why you entered has completely changed. And it's not that same trade anymore. Okay? Your trade has morphed into something completely different. And a lot of people don't understand that. They think just because they entered at a certain level, okay, they have this rigid mindset that, this is the pattern and I'm going to stick with it. Well, 10 minutes later you put in a completely different candle and now your whole pattern is negated. So you have to be very flexible when you're in a trade, okay? So when you're playing these reversal patterns, the stock has to react immediately. Okay, otherwise it's not the same trade. And again, I'm working on a few educational videos, and hopefully I'll be able to give you a few tips on technical analysis and all of that. So right now I'm focusing on trader psychology. So I want to get that out of the way, to kind of start you off as a beginner, because that's the most important thing you have to learn, psychology, before you even touch, any brokerage firms or any of that. Okay? So I'm focusing on trader psychology right now, so it might be a little bit, before I move on to this kind of stuff, okay? But I will remind you of one thing you need to remember. In trading, you either play a trend or a reversal. So trends, when you're basically continuing to go with the trend, continuing to go with the flow, okay? These trend trades, they give you more money the longer you stick around in the trend. But reversal patterns like this Starbucks, You want it to be immediate. You want it to reverse immediately at that level on that same candle. Okay, maybe the next one, but for the most part, we expect a reversal on that candle. Otherwise, you're going to lose. The longer you stick around in a reversal pattern, you're going to lose. Okay, the longer you stick around, the more likely you're going to lose. Okay, and I know that they always tell you, you know, let your winners run and cut your losers short. Okay, cut your losers short. They're right about that. Okay, you should always cut your losers short. If they don't work out immediately, by all means, cut them. But I want to focus on when they say let your winners run. Okay, let your winners run mostly applies to these trend trades. Okay, so if you're already in a trend and this stock that you have is proving to be forming a trend, then by all means, stick around. Okay, but if you're playing these quick reversal patterns and you really don't know where the market is going, and you know the only proof from the trade that you have is this one reversal candle, you should at least take off half of your position, play it safe to at least have some sort of profit. Okay, so with reversals, you know, you have to take your profits almost immediately. You know, you might want to let some of it run if the pattern proves itself to you and it proves itself to be right. Okay, but you know, at least take off about half in these reversal. With trend trades, you know, you have a little bit more, you know, leniency. You can take your time with them, but when we're looking at these reversals, you have to be immediate. You have to be immediate. This trade has to prove itself to you immediately. Okay, so this Starbucks trade, I think that's pretty much the only trade that actually got triggered for me today. Okay, which is okay. That's fine by me. You know, I'm not trying to, you know, compete with anybody. I'm not trying to figure out, you know, if I got such and such profit or if I had 200 trades per day. I'm not doing that. Okay, I just want to take some good trades a day, a few good trades in a day, if the market is, you know, behaving nicely. Today the market was breaking down lower and lower, so I just didn't feel the need to, you know, jump in on every trade. I saw Starbucks looked good. It didn't work out. I moved out of it. Simple. Now I posted a few other trades on Twitter, okay, but the levels were never reached, so those trades were never triggered. So there's really no point in talking about them. But what I want to say is that the reason why these levels never really got tagged is because you have to be conservative on days like this. When you see these down days where you put in red candle after red candle and you really are not sure where the next support is, you have to be conservative. Always go for the lower levels because you really never know how low a stock is going to keep going. And today was just a perfect example of that. So you have to adapt to the markets. Sometimes you just have to say, I'm either going to take this perfect level or nothing at all. And if the stock doesn't prove itself to me immediately, I'm moving out. Okay? Today was a day like that. So, you know, it's okay if you have 10, 20 trade setups and only one of them actually reaches the level, because more than likely this one trade is going to be that winner. Okay, and that's all you really need. You really need maybe 1 or 2 winners every day, maybe 3, you know, if you're at the computer all day. Okay, you really don't need that many winning trades per day. You only need to take a couple of trades per day if you're day trading. Okay, and believe you me, eventually it's going to add up and you're going to end up making plenty of money. So it's about quality, not quantity. Okay, now let's talk about FedEx. On my website yesterday, I was saying that I was hoping for a retrace on FedEx so I can get in on a short. Obviously we got a down day today, so the stock broke down today, so obviously we're not chasing now. We don't want the trade now. Okay, but if you're in it, again, the 200 MA is your first target. You should get there very, very easily. And then you have the gap fill. Okay, so I'm not interested in FedEx. Even if it gets to my level tomorrow, even if it goes up and, you know, it retraces back up, I don't want it anymore. I wanted it today, and, you know, today it broke down. Okay, the pattern played out today, but it's also nice to know that your analysis was right anyway. even if you don't catch the trade. And you might not have caught the profits, but you've proven to yourself that you had the right idea. So building confidence in trading is very, very important. Now, as far as tomorrow, we'll just have to see where we open. I can't, tell you anything. Today was just a very, very unique day. Today was a distribution day. So, we could have anything tomorrow. You just never know. But based on the black trend line, okay, that I showed you, the market is vulnerable to further breakdown. Okay, I just don't see upside on the markets the rest of this week. Maybe into Friday, because Friday tends to be an up day. But I just don't see that much upside. Maybe a pause, but definitely I don't see big upside. Okay, now there could be exceptions. Maybe the Fed comes in and puts one of their people in front of our TVs, or some good news gets announced somewhere. But just looking at the technicals, just looking at the charts, it just shows me that we're breaking down lower. Okay, maybe even tomorrow. So really watch that black trend line. Now this pink trend line is pretty nice too. Okay, that you see right here. And maybe also let's see here, this pivot at 153.50. Okay, and if we should head higher, I just look at the moving averages. Okay, I really don't see any trend lines on the upper side, upper levels on the chart. And honestly, I really doubt that we get to the double top. Okay, at least not tomorrow. Tomorrow I really doubt that we get to this all-time high again. So that resistance, to me at least, is out of the question for now. Okay. Alright guys, thank you for watching my videos. I noticed that I'm getting more followers and more viewers, so it's very inspiring. I'm very excited about that. So thank you very much for subscribing. Thank you very much for liking. I really appreciate it. And also I want to remind you, I started a segment on YouTube called Question of the Week. So if you have any questions that you want me to answer in a video, okay, so I'm not just going to email it to you, I'm actually going to answer it in a video. So please email that question to info@tradethesestocks.com, and I will pick the best one and then hopefully answer it next week. And as always, thank you for your support.